Greetings, my fellow financial ninjas. As you can see, we got a new mic today, so hopefully the sound quality on these videos is going to be much better compared to what we had in the past. Please do comment and let me know your feedback. Please also subscribe and hit that like button if you think these videos are useful because it helps the Google algorithm and in turn it helps the channel tremendously. So smash that like button. The topic that I'm going to talk about today is the 7 financial mistakes made by fresh graduates. So let's dive into it. The number one and the biggest financial mistake made by fresh graduates is buying slash leasing a brand new car. And of the two options between car buying and car leasing, I definitely think that buying is a much lesser evil of the two. Car leasing is an absolute no-no. As Dave Ramsey puts it, it should be called car fleecing and not leasing. So I'm not even going to get into the debate. I mean, I might reserve this for a separate video, but for this video, I'm going to concentrate on the buying part of it. And I think buying a brand new car is a huge financial mistake. There are a lot of things that are involved in buying a car. You have to put a down payment, and then there's a loan. You have interest rates that may or may not be favorable to you. There is the high cost of insurance. A lot of times you don't have enough experience driving, so that affects the way you drive, and there's a higher chance of you getting into an accident and so on and so forth. So, what is the ideal spending that you should have on your car? And I believe that the ideal spending amount should be 10% of your annual income. So let's say you make 100,000 a year, your car should not cost more than $10,000. So obviously this gets rid of pretty much most of the car brands in US. I doubt there is any brand new car under $10,000. The only option probably left is to buy a used car. Financially, it makes a lot more sense to buy a used car because the depreciation for a brand new car happens in the first 3 years. So if you're buying a car that's 3 years or older, most of the depreciation is already taken care of. So you come out quite a bit ahead financially. The other thing also, I think that you should be buying a car in cash. If you need a loan to buy a car, then you cannot afford that car. I'm sorry, but that's how it is. So you should just pay cash for a car and buy it. Now I understand that you're a fresh graduate and you don't have enough cash and you need to get a loan. That's fine. For the first car, getting a loan is okay. But for all your subsequent cars, save the money, pay cash, and just buy it outright. No loans, period. The next mistake made by fresh graduates is paying high rents. They've lived as student all this time and have curbed their spending, and so now they have this fancy job. So what is the thing that they do is they go and rent a really high-end apartment or a house or and whatnot and spend ridiculous amounts of money in rent. Avoid the temptation to do that. Try to share your apartment or your room with an extra roommate so that you can really crank up those savings. The next mistake that is made by fresh graduates is lifestyle inflation. So what do I mean by that? Lifestyle inflation is when you're living as a student all this time, and suddenly you have a nice job, and so you want to spend money on personal items such as clothes and shoes and fancy phones and whatnot. Avoid the temptation to do that. Now, by any means, I don't say that you should be buying clothes from Walmart or whatever, but don't go crazy on spending on personal items. Buying an 80-inch TV for your apartment and some fancy brand of shoes or clothes is an absolute no-no. Just spend a reasonable amount and curb the temptation to go overboard. The next mistake made by fresh graduates is that they start eating a lot outside. Now, by no means, I'm not saying that you should not go outside or go to restaurants with your friends and have a drink or two. Definitely do that, but try to avoid eating out every day, every meal. Once a week or maximum twice a week should be okay. However, eating every meal outside is not a good idea and is a huge financial drain. Try to cook at home. You can make a sandwich or something and bring it to your office instead of going to a restaurant for lunch and spending $12-15 on a single lunch every day. This will prevent you from saving money, and so you should be avoiding it. The next most common financial mistake made by fresh graduates is that they try to finance this lifestyle using their credit card. Now, living paycheck to paycheck is worse enough, where you are making X amount of dollars and spending it all in the subsequent month. But what if your spending is more than what you make? And in order to finance that, you use your credit cards to finance that lifestyle. And what ends up happening is you end up paying ridiculous amounts of money to bank in interest. So that is something that should be avoided at all cost. Live within your means. You do not have to spend excessively once you graduate and have a job. So always try to have zero balance on your credit card. Now, you can use your credit card, but just pay off the whole thing at the end of the month. That way, you can collect your points and at the same time avoid paying any interest rates. The next financial mistake made by fresh graduates is not thinking about putting any money in a retirement account. I know you're young and you have plenty of time to catch up with your retirement, but the earlier you start, the faster you'll reach your goal and the less the amount that you will have to put in your retirement accounts in later years. And this will help you tremendously to move ahead financially. So, as soon as you get your job, find out whether they have a 401k. If they have a match, that's free money. Take it and start your 401k. If you are able to put money in your IRAs, if you're eligible, because there's certain restrictions on contributing to IRA and Roths and so on and so forth. If you are eligible for those, go ahead and avail the opportunity, because the money that would grow in compounding will far outperform any contributions that you make 10, 20 years down the road. So start saving for a retirement account. Start saving in your retirement account as soon as you get your first job, period. And the final mistake that fresh graduates make is not having a plan to pay off their student loans. Ideally, you should not have any student loans at all. You should be paying it in cash and graduate without any debt. However, if you do have a student loan, which many of the students now they do because of the cost of education and whatnot, if you do have student loan, have a payoff plan. It doesn't matter how big the loan is, you should be done with your student loan payments within 2 to 3 years max. Carrying a student loan for years and years drains you financially. Those, my friend, are the 7 biggest financial mistakes made by fresh graduates. If you like this video, click on that like button, subscribe to my channel, and do leave a comment. I will see you in the next video. Bye.